What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, we're going to be breaking down the trigger or breakout method. So if you're ready, let's step into the war zone. So first and foremost, guys, we need a precondition. So for me, I'm looking for any of the Trading Wars patterns to help me find stocks that are consolidating and looking to break out the next day. So right here on the right, guys, I have my patterns, the Holy Grail, double inside bar, and inside bar patterns. And we can see right here with AMD, we actually had an inside bar close on the daily chart. So what we're trying to do, guys, is we're trying to drill down on a 5-minute chart and look for those triggers to enter. So if we break above the previous day's high, I'm going to go long with calls, or if we break below the previous day's low, I'm going to go short and buy puts. So this is the most simplistic way of using the triggers, using the previous day's high and low. All right, so I'm going to go ahead and play and talk you through how to take this trade. So first of all, the first bar comes in, breaks the trigger. So we're immediately filled right when that trigger hits using a stop limit order. So that's the first way of entering the trade. You have a stop limit order. Once it breaks, you're in the trade, or conditional order. Once it breaks, you're in option contracts. Okay. Or the other option, guys, is to wait for the candle to close. So once the candle actually closes above the level, then you can enter. So that's a little bit more safer, but it also can lead you to getting in a little bit further than the entry price. All right. And then let's just let this play out, guys. As you can see, so the trigger goes, pushes through. You'll be covering some profits here, moving your stop loss up to break even when you can. And that takes me to the next topic here. So how do you actually manage a trade? So once we break above that level, guys, you can either put your stop loss below the low of that entry candle. So the candle that took you in, you can put your stop loss below the low there. Once you start scaling out, get your stop loss to break even. Or guys, an advanced strategy that I like to use is actually using the previous day's Fibonacci range, which is a topic from my book, and using these Fibonacci levels as stop loss positions. So when we trigger above the levels or below the levels, using something like the 236 to be your line in the sand. All right, guys. So otherwise than that, there is an advanced trigger method in my book, which I call front running, which will let you get in before the actual triggers. Thank you so much for your time. I hope this helped, guys. Remember, entry using previous day's high or low or advanced trigger method. Okay, we're looking for stocks consolidating with the trading wars patterns leading into breakouts. And then we are going to use trade management, either using the candlestick or using the fibs for our stop losses and scaling on the way up. All right, guys, thank you very much. Have a great day.